Hello and welcome. I'm going to show you how to use OptionsProfitCalculator.com to calculate estimated profit of options trades. First, here is the unique way that OptionsProfitCalculator.com shows your returns. This here is a $585 covered call on Apple. Along the horizontal axis we have time, and on the vertical axis we have the possible price that Apple may reach. So we can see that if Apple gets to $601 3 days before expiration, we will make $1,481 in profit. If we click on that figure, we can see the breakdown of the closing trade. Okay, now I'm going to show you how to do it. So we'll start on the home page. We've got a few different strategies, popular strategies to choose from. Let's have a look at the covered call. So for an Apple covered call, type in Apple, click Get Price. It'll get a delayed market price. And we want to write a call option. We just select option, click the select option button. Up the top here, there's the different expiries for Apple. So let's say we want to choose the 22nd of December. Now you've got calls on the left, puts on the right, bid, ask price, and a mid price, which I like to use, so I included it. We'll choose the at the money option and just click calculate. In a few seconds we'll see that table appear. Now in the first example we saw the figures as profit or loss in dollars. The default is to see percentage return on the maximum risk. So for that same position or same outcome, you can see the same price, and 2.6% is what that equates to. And you can change the output type from percentage and maximum risk, percentage of initial outlay, which is often the same, but for some strategies it is different, or the dollar value there. If we have a look at the top, the summary, you can see the initial outlay, and you can click to see the details on entering the trade. This is a lot more interesting on more complicated option strategies. The maximum risk, which is substantial, but that is when Apple reaches $0, which is unlikely, of course. Maximum return is $1,607 at expiry at $585, and we've got the break even there as well, so you can have a look at that. And you also have the option to share via social media, or if you just want to post email or put it on a forum, then you can get the short link to share it there. I'm going to show you some examples of some of the other strategies that are popular. Here's a call credit spread, so it's on Apple as well. We're buying the 19th January $600 call and writing or selling the same month, same expiry, 620. So this is going to be a bullish call spread. You can see the debit or credit in the spread there, and you can see the profit and loss is a lot more substantial. It's a much higher risk trade. Of course, 188% return at the $620, and it's below 600 or below at expiry is you lose your entire outlay. And you can see the effect of time decay and how that impacts the maximum risk and loss as well. Okay, and finally a calendar spread. This is on VIX. We're buying the February $16 call and writing the January $16 call for an $11 net debit. And again, an interesting pattern here. You can see the profit centered around the strike price, $16, and the profit and loss both fall away before that expiry date. So there you have it, OptionsProfitCalculator.com. Great site for strategies that rely on time decay. It can really help get your head around how it pans out in practice. Remember, this is a free site which is paid for by your ad clicks, so please share the site, tell your friends, and support us by supporting our advertisers.